Howdy, Jacob here. Today we're looking at Destination XL Group in the specialty retail industry. Just 162 million market cap on 99 million enterprise value. They operate as a specialty retailer of big and tall men's clothing and shoes in the U.S. Incorporated in 1976 out of Massachusetts. It's a very small company. For smaller companies, I do like to look at insider ownership, and we see insider ownership at 11.3%. Okay, so greater than the 10% that I look for. Again, that's just a metric I'd like to look at. It's not an end all be all, but that does mean that hopefully the board, CEO, CFO, management will do what's best for you as the shareholder if you were to buy this company because they themselves are heavily invested into the business. And if we do see, 414 million in revenue in 2015 to 522 million in 2024, very small growth. You're probably looking at 2 to 4% year-over-year revenue growth averaged out, and a gross margin of 45 to 50%. Operating margin the last 3 years has been pretty good, but prior they had a really tough time making money. Recently, the return on invested capital looks massive. So if they get back to that 10 plus percent operating margin, historically they appeared to have a great return on invested capital. Majority of them expense is cost of goods sold, also a heavy amount of sales, general admin, none to R&D. Balance sheet shows 28 million cash on hand, 32 million short-term debt. So you're looking at 60 million cash-like products, no short-term debt, no long-term debt, 117 million in capital leases for specialty retail. Not very surprised by that. So pretty good from the balance sheet perspective, more cash on hand, no debt, and their production of free cash flow the last couple of years has been pretty solid. Return on invested capital has jumped pretty good though from these investments. Otherwise, outside of making investments, share purchases is mostly the other form of capital allocation that they have. So we're not looking at a long history of consistent profits. So this would be a business that, if I'm being honest with myself, I'll likely put lower than someone that would really understand this business, because for me, I like to work off averages. I like to see if it's 0% some years, 20% others, it might average out to 10%. That's what I'm going to be using as my basis. And so for me, with these types of margins, I'm probably going to use a 5 and 6% margin. For revenue growth, we're not looking at a lot of growth here. This is a heavily, I think that there's a lot of competition here. Yeah, it says they sell just mostly XL stuff, but I think a lot of other companies also sell XL size clothing. And so this is just that specific market. I think 3% is fine. I think a market average PE, due to the fact that their enterprise value is so much greater or so much lower in the market cap, meaning that they have a lot of cash on hand to use if they want to. And I think that gives them an extra hand over the fact that their growth might be a little bit less than market. With a share change of, let's say they are able to buy back 162, that means 1.6 million is 1%. I mean, they can probably buy back 2%. This is going to be something I'm going to have to do more research on. Can they, let me do 13p, still a buy. So I'm going to have to do more research, see whether I think their long-term margins are. And if they are 5 to 6%, I do think that this could be a reasonable position to get into. But again, it all is going to depend on whether you do your own research and are comfortable with your analysis, because what I come up with from what I read is going to be different than what you come up with from what you've read with what you've read, because my experience in historical investing lifetime is going to be different than yours. But this will be this looks interesting right now, so I'm definitely going to have to put on some reading glasses and get to reading. Don't actually wear glasses, but yeah, either way, hope you enjoy the video and have a great rest of your day.